saw some of those numbers, the Dow hovering around 50, traders, of course, awaiting this week's key jobs and inflation data. To talk more on how things are shaping up on Wall Street, we're joined by Adam Turnquist, Chief Technical Strategist at LPL Financial. Adam, thanks very much for joining us.
Hey, thanks, Roger. Great to be here.
Is this the start of the week that you expected after what we saw on Friday? I went away on vacation and I came back and I'm like, what happened last week? And today it seems a little calmer.
A little bit calmer, and as you mentioned earlier, it was a roller coaster last week. And unfortunately for the S&P, we did end on a high note. Same with the Dow clearing 50,000. I think this week maybe a little bit of calm before the storm, or a holding period until we go into Wednesday's employment data and then, of course, Friday's inflation data. So we're hitting both ends of the dual mandate for the Fed. Pretty low bar after some of the economic data we had last week in the U.S. in terms of the labor market. Pretty underwhelming. So I do think that's the setup there. And then on the inflation side for Friday, we have had more of the commodity-linked inflation, we'll call it leading indicators, move higher, whether that's metals, whether that's crude oil. So that usually trickles down into the consumer inflation. I don't know if we'll get there yet, but I think a pretty low bar there in terms of inflation expectations and what the market might be able to absorb if it comes in a little hotter than expected.
And what kind of storms are you expecting for the numbers? I mean, I looked, you're saying maybe 2.5%, which is continuing to drop and get closer to that 2% goal.
Right. It's on the trajectory, and some of the metrics within the CPI report, notably the services side and the housing, that's really propped up the inflation at the consumer level. We see higher frequency data suggesting that that's going to come down, that owner's equivalent rent category. That should help. I think on the inflation battle, some of the other inflation metrics like trueflation have come down and deviated a little bit from some of the more traditional metrics. We think we'll get there, especially as the labor market slows down, but does not stop. We don't think there's a recession, just more of a slowdown. And I think that should overall help inflation come down as well. And not to mention the productivity gains as well that we expect to see in 2026.
And what do you see the Fed doing with that 2.5% and heading into their next meeting?
So we think it's a second half story for the Fed in terms of when they'll start cutting rates again. We're pricing in maybe 2 more cuts this year, maybe 3, depending on how inflation moves in the next few months. But a good tailwind for the U.S. economy, U.S. equity markets. We've looked at how stocks handle rate cuts near record highs, and no surprise, it's been a pretty good tailwind for equity markets and more of a risk-on backdrop. And we expect that to continue, albeit not at the same linear path we've witnessed to this bull market. We think it's going to be a little bit more choppy, a little bit more volatile, especially with policy front and center here.
And with the Dow, we're talking about how it's crossed 50. Is that people pulling out of tech, out of AI, or do you see them coming back to it?
Out with the new and in with the old, I think, in this old economy trade that's really propped up the Dow. It's been this broader rotation out of tech. It's not that tech is over or the big tech trade is over. It's really just been in this consolidation phase. I think as we've moved to the next phase of AI, and it's really a show me story in terms of quality of spending, what's the return on investment. Investors have moved to more value-oriented sectors, and that's really what's driving the Dow. So an important index, not necessarily the best benchmark when you look at the price weighting methodology there, but I think it does speak to just the overall trajectory and evolution of our equity market here and continuing higher. So a good sign for the bull market on a longer term view. Tech, we'll see how the sector shakes out this week. We had a nice rebound on Friday, especially in software. I think that's the swing factor here for the tech sector and the broader S&P 500 to get through maybe that 7,000 point milestone. That's been a little bit of a problem spot for the broader market here.
And with tech, what concerns do you feel there are? And then what are also some of the positives that you may see happening?
So the big concern is not just the AI bubble and the CapEx spending, it's the AI disruption. And that's been the narrative change over the last several weeks. That's played out most notably in the software space. A lot of these companies call it price for extinction when you look at the sell-offs. We haven't had this much downside momentum ever in some of the indices and momentum gauges that we follow. Probably a little bit overdone. And from our view, when you look at where valuations are, even when you look at overall revenue expectations, margin expectations within software, they're holding up pretty well. That valuation has reset to what we view as probably attractive levels down here when you're talking multi-decade low type valuations on an earnings multiple. So we think there's maybe some room for improvement. And that's one of the upsides that we see, just these oversold conditions creating maybe an opportunity, a little bit more of a asymmetric setup when we look at overall risk versus reward.
And then one of the forgotten or the beaten up ones, healthcare, but you're seeing some opportunities.
Right. We like healthcare. We're warming up to the idea of healthcare. It's been starting to outperform over the last few months, and we think it fits well into an overall portfolio because it does have a little bit of a defensive shift, but you also get some more risk on type behavior, whether that's in the biotech space within healthcare. That's been working pretty well. Pharma, another one that has maybe some of the defensive qualities and provides a little bit of a ballast. And then AI as well going into the biotech space. When you look at some of the machine learning capabilities within the biotech space, they're bringing drugs to market cheaper and a much more cost-effective way and a quicker way as well. So that's another theme that we like within the healthcare space. Pretty good valuations and an earnings outlook as well.
Okay, we'll leave it there, Adam, but thanks as always for joining us.
All right, thanks, Roger. Appreciate it.
Adam Turnquist is Chief Technical Strategist at LPL Financial.